Good evening and good evening and welcome to another episode of the weekly market wrap. My name is Daniel Ang, and I do see some new names on the attendees list. And if you are meeting me for the very first time, my name is Daniel Ang again, and I'm the founder and CEO of Traders Academy International Private Limited, based out in Singapore. And I've been in the market since 1985 and have been doing this for almost 40 years. So today I'm doing this webinar in collaboration with IronFX, who is sponsoring this event. Now, let's get on to the content itself. Now, before we get into the content proper, I want to acknowledge IronFX, a broker with presence in over 180 countries around the world. And they have been sponsoring my event for quite some time, and I do appreciate their sponsorship. And of course, I have to let you know that the presentation here is by no means an offer to buy or sell any kind of securities, be it FX, CFDs, or any kind of margin products. And the trading of any kind of margin products to carry risk, do understand your own risk profile before you attempt to trade any kind of margin products. And the content, and I'll be sharing you my views on the various markets. Just remember, those are my views, and it's got nothing to do with the sponsor. And we will not be responsible for any action that you may take as a result of attending this presentation. Now, with that being out of the way, let's get started. Now, the focus this past week has been on the following. We have a retail sales that was released out of Eurozone. And let me see, this has not been updated for some reason. Anyway, right. Okay. Retail sales came in marginally, and we have expected the result to be positive, but it came in a lot better than the market expectation. Previous month was negative 0.1. It came in at positive 0.8, and Australia has actually not moved on interest rates, so we will have to see what happens. And let's get on to this. You can see the retail sales here has been showing us that the retail sales in the whole of Eurozone has been coming down steadily, and we can see the latest data set has shown a little bit of a pickup from above the zero line, but it is still very tentative. But it is nonetheless a sign that retail sales is slowly climbing out of the hole. You can see that since the beginning of the month, a year itself, you can see the retail sales has practically hit bottom near negative 4%, and it has been climbing steadily, with the latest reading being the highest for this year. So is that a sign that the Eurozone is getting out of a recession, which is very likely to be the case? And we do not know for sure, but it is, like I say, very tentative. Then as far as the New Zealand central bank is concerned, we have the Reserve Bank of New Zealand actually cutting rates for the second time from 5.25 to 4.75. So you can see that this is about among the very first central banks in the West to actually be cutting interest rates, and this is an acknowledgement that globally we are seeing a coordinated effort to cut interest rates from a very elevated levels for the past 30 months or so. Okay, so by the way, New Zealand central bank was also one of the very first to start hiking interest rate way ahead of the Federal Reserve. So the fact that now they have been cutting rates and cutting rates very aggressively, you can see this is a 50 basis point cut, and this is testament to the fact that economies around the world is definitely in a lot of trouble, and this is a sign that they are looking to stimulate their own economy. So this could be a global trend. So if, by the way, you have any question, do remember to put them into the chat box so I can address them as they come up, okay? Then here we have Germany. Retail sales has been good. You can see this is also a reflection of the Eurozone-wide rebound in retail sales. Again, we can see that the retail sales number has hit a bottom somewhere at the beginning of the year, and it has been steadily been darting in and out of the zero line, and the latest number is at 2.1%, which is a very good number considering the previous month was negative 0.8%. Okay, so again, this could be a sign that slowly but steadily the entire Eurozone is climbing out of the downbeat economy. Okay, Now, this is the number that the market has been expecting, which is the CPI numbers. We have two sets of numbers. One is the month over month, and the other one is the year over year. So we can see the expectation all came in within expectation. So for the headline CPI numbers for the month of September, month over month, it came in at 0.2%, marginally above the expectation of 0.1, which is very much in line with the previous month. And if you take away the food and energy component, which is the core CPI numbers for the month over month number, it is again the same number as the month of August at 0.3%, although the market do expect this number to dip lower. It did not. Okay. Then the one that we want to watch is the year over year number. The headline number expectation was a dip from 2.5% to 2.3%. It came in somewhere in the middle at 2.4%. So it is also showing that inflation is bumping up a little bit. Okay. Then for the main core CPI numbers year over year, we can see that it has actually ticked higher from 3.2% to 3.3%. So if you look at the last data set, which is the year over year core CPI number, we have evidence to see that their inflation is creeping higher. So will that complicate the Federal Reserve expected rate cuts for November, which is scheduled on November the 6th and 7th, just a couple of days after the US presidential election. So the November FOMC meeting will be very crucial, and whether this set of numbers is going to change the narrative remains to be seen. But however, we are beginning to see that inflation is definitely going to be a concern going forward, because we have seen over the past week two major hurricanes hit the Gulf states, principally hitting Florida and North Carolina, and both have caused extensive damage, in particularly Hurricane Milton, which is a Category 5 hurricane. This is the worst they have ever seen in 100 years, and damages were estimated somewhere in the $50 billion to $100 billion, and that is going to be very inflationary. Whether that will cause the state of Florida to go into bankruptcy remains to be seen, because the real estate sector in Florida has been totally wiped out, okay, by these hurricanes. So anyway, we will have to see the impact of these hurricanes in the months ahead. We will not see it immediately, but it is something to watch over the coming months. And again, on still the inflation story, we have Germany harmonized index consumer prices. It came in within expectation, flat at 1.8%. So we don't see any kind of improvements here. So again, we want to see what else goes forward. US Consumer Price Index, again, sorry, this is the, sorry for the heading. It is supposed to be the Canada employment numbers. We can see that in terms of jobs being created for Canada, there has been an uptick. Market was expecting no expectation. The revision was bumped up higher from 22.1 thousand to 46.7, which is double what the previous month has been doing. So this is a good sign. And unemployment has also dipped lower. There were expectations that unemployment rates in Canada expected to go up to 6.7 from 6.6%. It came in down to 6.5%. So this is one of the first improvement over the last 6 months or so. We can see that unemployment rate has been steadily been climbing. This is the first dip so far since we beginning to track this data set for the year. Okay, and this is again the other data set that we are watching. This pertains to the PPI. Now, to me, the PPI number is the raw number that goes into production, and before it hit the consumer, that shows up in the CPI. We want to monitor the PPI numbers, which is the producer price input, and that has been steadily been climbing. It was 2.4% in August. Now it's 2.8, one tick above the 2.7 expectation. And again, this is again telling us quite a similar story. If you put the CPI and the PPI numbers next to each other, we are beginning to see a somewhat of a rebound in inflation in the United States. Like I said, this is going to complicate what the Federal Reserve may do going forward. Now, the market has actually priced in another 100 basis point cut all the way into 2024. Now, remember, we only have two more FOMC meetings left, which is in November and then in December. If the market expectation is for another 100 basis point cut, it means on average, market expect 50 basis point cut in November and another 50 basis point cut in December. In my opinion, that is highly unlikely. So the market could be in for some kind of disappointment. So again, just be aware that the Dow Jones and the S&P 500 are trading at record highs at the close of Friday. And this is again based on expectation that the Federal Reserve will cut rates further. Okay. And this is the last data set that came in past week. Okay, we had a Michigan Consumers Sentiment Index has not improved. In fact, it has dipped lower from 70.1 to 68.9. Now, this number is actually quite volatile, and there is no way to actually verify these numbers to be positive. So, but by and large, you can see ever since it hit a high of 79.4, consumer confidence has been declining for the past 8-9 months, leading to the current number of 68.9. The lowest been 66.4, and we can see that it has basically stuck around that range between 65 to 70. Okay, so 68.9 is not a good number, but it's not necessarily a bad number, but it is not a strong number. Having said that, okay, so you as consumer confident? Because if they are confident, then it will be bullish for equity markets, and if they are not, then it could reflect the US consumer is experiencing some kind of fatigue, okay, and that will definitely negatively impact the GDP going forward. Now, with that out of the way, we also knew yesterday China has unveiled a stimulus package. And remember, over the last, since the beginning of this month, the Chinese equity markets experienced exceptional move in their local stock market, and that has also been flowing over to the Hong Kong market. And the Hong Kong market was languishing 3 weeks ago near the bottom of the global ranking. And after 3 weeks of miraculous surge, Hong Kong market now is ranked the second best performing markets so far this year. So it has been a transformation move over the past 3 weeks, largely based on the idea, based on China's launching of stimulus package, barely 1 week after the Federal Reserve cut interest rates. Again, over on Saturday, the market was expecting further stimulus, and the key feature of the latest stimulus measures has been 1.2 trillion yen, in which they are launching in local bonds, means to say they're going to use debt, okay, to actually help to resolve the current issues surrounding the property market, as well as other hidden debts that has not been exposed so far. And they are allowing local governments to actually to use the proceeds from the special bonds that they're going to be able to launch to recapitalize not only the state-owned banks, that also to bolster the bank's tier 1 capital requirements. And this has also been suggesting to us that this shows that they want these banks to actually offer more loans, more favorable loans to consumers, and hopefully that will be a catalyst to boost the Chinese economy going forward. Okay, and they also wants to support low-income individuals and students to boost consumption. And you can see they are also increasing, not only increasing, they are doubling the scholarship for undergraduates from 60,000 yuan to 120,000 yuan annually. And again, these are stimulus package. We will see whether this will work, but I suspect tomorrow when the Chinese market and Hong Kong market opens, I think the market is likely to take it very, very positively. Okay, so this is something to watch, because there has been a large inflow of capital into emerging markets, in particularly China and Hong Kong. So this could be a set of narrative that will suck capital away from maybe the American capital markets. So it's again something we want to watch, okay? So this will be my outlook of the various markets. Now remember, these are my views, nothing to do with this sponsor, okay? And going forward into the coming week itself, we have this data set that we want to watch. We want to watch the UK employment numbers, as well as the inflation numbers coming up from Canada. And next week will be everything about inflation. Okay, we also have the major highlights for the United States will be the retail sales, which is on Thursday itself. So do watch out for this. Now let me move on to the chart itself. Now I'll be using the chart by the IronFX platform. So everything that I'm going to share with you will only be confined to products that I can find on the IronFX platform. And as usual, I will be taking you through the various asset classes, starting with the Dow. So you can see that there are a couple of windows that are open, and For those who are unfamiliar with the way I look at the various markets, I have a way to look at directional bias. And because I'm very visual, I have come up with a system that allows me to see the dominant trend. Now, this is the monthly time frame. You notice that there's not enough data set because this is the monthly time frame. So we can see this is the Dow Jones. It has traded to the all-time high again on Friday. Now, this is the second consecutive high that we saw in this week itself. Now, if you want to see the weekly time frame, you can see this is exactly what we are seeing. At the bottom here is actually the pandemic low, and you can see the market has doubled in value. At the low in the pandemic of March 2020, the value in the Dow was 18,200 plus. Now it's almost 43,000. So the market has more than doubled. So this is how the market has been performing over the last 4 years or so. Now, at the lower degree on the daily time frame, you can see that as far as we can see, the bullish trend is still very much intact with a target about 46,000 if this current bull market extend higher. Okay, just remember, for those who want to know whether this market is sustainable, based on what we can see so far, it does look very promising. However, when you look into the futures open interest and volume for the Dow Jones futures traded based on the cash index in the Dow, you will notice that not only the open interest and volume has been collapsing, not only in Dow, it's across the board for all the major equity index, including the Nasdaq 100, including the S&P 500, and even the Russell 2000, which is a small cap index. And this suggests to me that the big boys have already left the market or are leaving the markets. So that brings into question who is actually pumping up the prices. That is something that you have to consider. I'm not going to draw a conclusion for you, but typically, what we want to see in a market that is sustainable, we want to see rising volume with rising prices, but we are not seeing it this time. Okay, so we have record prices in the S&P 500 and the Dow, but the volume has actually not caught up. In fact, it has actually declined for quite some time. The whole of this month, we can see that the volume has actually collapsed. So this is something that you want to consider going forward. We don't see that in the MT4 platform, but if you go to the CME website to take a look at their open interest and volume, it is very, very clear that across the board, volume and open interest has collapsed across all the major equity index. Just something to think about, okay? Then in the 4 hours time frame, again, there is no counter trend. The dominant trend has been in play. You can see that as far as the 4 hours is concerned, we only got a chance to buy. Okay, that was the only time that we have a chance to buy, and the market has not looked back since. Okay, these are areas where I highlight in blue. These are what we call the VDR, what I call the very deep retracements. So I have a way to where I try to see the interplay of the forces of demand and supply. It is usually confined within the parameter, and the fight will be fought for dominance between this parameter, between this level here at 38,009 to this level here at 41,314. And market at some point in time, one side will win the fight, and in this case, the buyer have the upper strength. They push the price ever higher. So this is where we are right now. And because prices are already outside this perimeter, it is not conducive to buy. But for those who have the means to actually do counter trend, do look out for the possibility of doing counter trend, because like I say, price has already left the dominant area, and as price goes further, the target here is 43,356. Meaning to say, if I buy anywhere around current prices, you can find that my odds are not very good. However, if I get it wrong, if the market starts to come down, this is where I will cut loss below the 38,009. Okay, which is very, very far away. So from a risk reward perspective, I'm not looking to buy. Okay, and if I'm buying, I definitely will have to tighten my stops very aggressively. In this case, the target is so near, it doesn't give me a lot of incentive to want to buy at current levels. So again, you have to make up your own decision. This is the 1 hour time frame, and the latest iteration of this, you can see that this is the latest move. From 41,000 almost 800, it has been going higher. Now let me backtrack a little bit, okay? And I want to include in a indicator, what we call the ADX. Now ADX is the way I use to see whether the market is in the trending mode, okay? And what I want to see is something like this, okay? Where whichever the way the market trades. In this case, we can see it's obviously an uptrend, and this uptrend, so long as we are showing the ADX in a climbing mode, it means that it's sustainable. So what it does it translate into? Translate into a situation in which maybe using a more aggressive entry method would be called for, because the market may not retrace at all until the market starts to peak, for example, here. Okay, you can see that once the market peaks, it goes into a sideways pattern. It means to say that if you buy when the market starts to peak in the ADX, that means the momentum is somewhat lost. Okay, however, it doesn't tell us whether the trend has changed. That can only be seen if the price breaks below this point of invalidation. Based on the daily time frame, that point is 37,232. So unless this level is taken out, I will still maintain a somewhat bullish outlook. Okay, so for those who want to understand how I draw these boxes to determine the directional bias, you can always contact me individually. Okay. Now let me go to the next popular product here, which is the S&P 500. Now this is a retail index compared to the Dow, which is more of an index used by fund managers. Very few retail traders trade the Dow. However, that cannot be said for the S&P 500, which has been designed to be retail friendly. So we can see the S&P 500 on the monthly time frame is again trading at a record high at 5,822.6. Now you can see that better in the weekly time frame. You can see that except for a pullback here, the market has not looked back. So all the while, the market has been trading on one side, which is the upside. Okay, so as far as the weekly time frame is concerned, the target for the S&P 500 near term is about 6,380. So this is just a projected target. However, if we take this as a equality move, the nearby target is 6,115. So if let's say you have already gone long, just be aware that 6,115 is the equality of this move here, which typically is a target. Okay, and if the market somehow starts to slow down, for example, near the 6,115, that could be a sign that the market may have already hit its target and is getting ready to come back down. Okay. October has traditionally been a very volatile month. We can see that now most of the major decline in equity markets typically happens in October. So be very careful about October. I suspect towards the end of the month we may see some bit of somewhat of a pullback. Okay, so be aware October is going to be crucial. In the daily time frame, you can see that the directional bias is still favoring the upside. There is no sign there's a counter trend as yet. The target on the daily time frame is at 6,129.55. Okay, these numbers are not cast in stone. These are just projected target. Market may drop short, may actually overshoot, but this is just a target to aim for. Okay. And in the 4 hours time frame, based on this factor, we can see that again even in the lower time frame, there has been no sign that the market has is about to come down. Okay, still no sign. Technically, I don't see a sign that there is counter trend in place even in the lower time frame. So this supports the immediate bullish outlook with a target currently at almost at 6,200 points. Okay, and even for the lower time frame, you can see lower time frame, we see a bit of a pullback on Friday's high, okay, at 5,822.6. And this could be the first time we will see likelihood of a formation of a near-term counter trend. Again, we want to watch. The market is not trending, means to say it's not running away because the ADX is not climbing. And this is also the case for the 4 hours, and it's also the case, let me put in the daily time frame for that and see if the market is trending in any way. Okay, we are beginning to see an uptick in the ADX, suggesting that if the market accelerate, it may actually continue to go higher. But however, right now, what we are seeing here, there is no clear sign that it is going to surge even higher. But the sign is beginning to grow. If we see a major surge, this index will start to climb, and that will be something that we want to watch. And always watch for a peak like this. Okay, in the ADX, when the market peaks, for example, here, if you look at here, it corresponds with the peak here. So every time the ADX starts to peak and turn south, okay, it's usually a sign that this move and this entire move here signified by the rising ADX is over. So the momentum that carries the market all the way to this peak correspond to this peak in the ADX when it starts to climb down, and you can see the market did pull back quite sharply. Okay, so again, if the market wants to, if the ADX starts to climb, just assume that the market has momentum on its side and it may continue to go higher. Okay, the moment it start to peak and come down, this is where you want to get out of the market while you still can. Okay, so again, both the outlook for the S&P 500 and the Dow are quite similar. So we want to take a look at the Nasdaq 100, which has not been really performing as well as both the Dow and the S&P 500. In the Nasdaq 100, this is the monthly time frame. You can see there's no new high. The high was traded on July the 10th, which was my birthday. Okay, so that level was 20,758, and for the last 3 weeks, we can see that, sorry, for the last 3 months, the Nasdaq 100 has not been trading anywhere, or rather has not been breaking new highs. Okay, so this is something that to consider. So does it suggest that the tech stock rally is over? Not necessarily the case, but it's having people are pivoting away from the very rich valuation in tech stocks, and this can be seen in the Nasdaq 100. So in the weekly time frame, again, we have a counter trend in place. From the weekly time frame, you can see that the weekly time frame has seen the top at 20,558.3, and we see a very sharp pullback. Okay, to all the way to 17,238.8, and now the market is rebounding again. So this move here was actually after what you call that, the non-farm payroll in August was terrible, and that was the first sign that the US economy is in trouble. And this is also followed by the following months, two non-farm payroll numbers that was weaker than expected, that caused the market to sell off. And of course, that was also the time where we see the unwinding of the yen carry trade, and this has compounded the move. But now there's no more talk of the US market going to recession. In fact, nobody is even mentioning about that. And the talks of a soft landing right now has been supplanted by another talk called no landing. No landing means the market is going to take off. Okay, so is it going to be the case? Again, we will have to see from the chart here. Just be aware the Nasdaq 100 currently is the weakest link among the major equity index. On the daily time frame here, you can see that ADX is again showing sign that it might climb. So we are now at the borderline case, almost at the verge of taking out the 20,313.6, which is the daily time frame point of invalidation. So on Monday onwards, if this level is taken out, then we will eliminate the counter trend. The market will resume its up run. Okay, and so long as 17,238.8 is not taken out, we will maintain a bullish outlook in the daily time frame. Now, in the 4 hours time frame, again, we have no counter trend in place. Okay, the market is not trending. You can see ADX is not climbing. So this is a good sign. Based on risk reward ratio, if you look at the daily time frame, this could be offering us the lowest risk possible to take a counter trend. Meaning to say that now, based on the daily time frame, because the ADX is not necessarily running away, trading counter trend could be considered, because if I'm wrong, all I need to do is place a stop above 20,313.6 and take my chance. Because if I'm right, minimally, I'm looking for a move towards 19,177. Okay, and in the 1 hour time frame, which is a very low, very short term, you can see that on Friday the market hit a high of 20,315.2 and turned back down. Now this area that's shaded slightly darker in pink is what we call the very deep retracement. Let me say, if prices go into the area like this, okay, the very dark pink area, which is like I say, I'm very visual. I need to see how the price reacts in a very visual way, and this will actually highlight the possibility of doing counter trend. And if I've done counter trend, first with a short sell at 20,291 and again at 20,304, I will be sitting pretty rather pretty right now. Okay, so again, this is something that I use on the day-to-day basis. At the bottom where I have a green box, and of course in the green box I have a area where I shaded blue. These are the what I call the very deep retracement. If prices ever get into this area, my instinct would be telling me to go and buy. Okay, likewise, as a market trade higher into this bracket of prices with a darker pink, my instinct will be telling me it is more advantageous to go counter trend, because the risk is actually very well defined. Okay, so here you can see that if I've gone in to sell on Friday, then of course, like I say, I'll be sitting rather pretty and with a nearby target of 20,101. With the equity index in the States done, let me look at the, let's say, for example, for those who are trading European equity index, maybe we'll look at the FTSE. which is the UK index. Now, UK index has also been trading rather elevated. For a high so far, the record high is 8,477.3. We have a bit of pullback almost at the same time as what we saw in the Nasdaq. However, price has gone back up. Okay, so again, this is an area. Remember, 8,418.1 was inside the what we call a very deep retracement. For short, I call it the VDR. Okay, so this means that to go counter trend then will be very advantageous. However, price right now is outside. Okay, it's below this shaded area here. So do we want to go and sell? We have to look for clues in the lower time frame. Okay, as far as the weekly time frame is concerned, the market is technically very bullish, but you can see that the market has been bunching. Okay, the prices has not been able to go much higher, but and it has not also been going lower. So it has been basically been trending sideways for quite some time now, and this is again on the weekly basis. Again, there's only one time the market goes into this shaded area, which is 8,418.1, very similar to what we saw in the monthly time frame. In the daily time frame, again, we can see the same thing play out. Okay, here we can see the market by and large after this big drop has been basically doing nothing but sideways. So there was only one time the market surged into this bracket of prices above 8,363.25 to a high of 8,373.2. So basically, these are areas in which you should be placing, or rather, this system would actually be telling me to place limit sell here. Both first at 8,363.25 and then again at 8,388.88. Okay, so there is technically a sell position in place. However, the market has been going sideways. So the market is not trending, and we can see that in the ADX. It's basically not non-trending. Okay, and again in the 4 hours time frame, we have one time the market went up into this shaded area. So for all intent and purposes, the market is not going anywhere in FTSE, and this is evident not only from the lower time frame, we also see very much play out in the higher time frame. In the 60 minutes, this is how it looks like. There are multiple times in which the market goes into these very deep retracement levels. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it has been 10 times the market has not been able to break out. And this risk level, or what you call the level of invalidation, is very well defined. It's at 8,336.7. So long as this level is not taken out, selling does make more sense. And the market has actually gone down, bounce, go back down again. And now you can see there was only one time if we have sold, then here we want to take profit. Okay, and then maybe turn long. So right now, in the very short term for the 60 minutes time frame, the market seems at this current moment is in the middle of nowhere, because right now where the price is on Friday is sandwiched between the VDR on the buy side and the VDR on the sell side. So at the current moment, it doesn't give us any low risk, high reward trade setup. So for time being, maybe you should not be watching the FTSE for opportunity. Okay. However, you can see ADS is struggling to go higher, but this is the wrong kind of move, because I'm looking for something that sustained like a 45 degrees rise over time. And beyond this, I want to take a look at DAX, which is a German index. For those who are trading the European markets, just know that Germany is the largest economy in the Eurozone, so it pays to watch the German index. Now, despite the rather poor performance as far as the economic data is concerned, Germany equity markets has been rather resilient. We can see it's trading at near record high at 19,492.9, and on Friday closing, it does looks like it's going to challenge that level one more time. Okay, in the weekly time frame, again we are seeing the fact that the market is very bullish. So this is counter trend to what we are seeing as far as the data is concerned, but we can only trust what we see in terms of price action. Price action, as far as we can see, has been supportive of the buy side across the board, whether it is US equity markets, or whether it is FTSE, or whether it is German index. All are telling us that for some reason, equity markets in countries that economically is not performing very well, in particular to UK and Germany, you can see equity index has been rather elevated. Okay? So this is the daily time frame. Market has a counter trend in place at 19,492.9, and now the prices, instead of going down, has bounced back up into this shaded area. Now, if I expand this area to let you see, the market closes into this very deep retracement level on Friday, thus giving rise to the possibility of a selling opportunity. For those who trade counter trend, just know that in the time when you know that this trade is wrong is when market take out 19,492.9. So on a relative basis, if I'm right, this is the target for this move on the sell side at 18,547.34. Okay. In the lower time frame, again, there is no counter trend. So what we are trying to look for is counter trend. So we are not seeing consistent counter trend across all time frame. So maybe that is calling us to be cautious, stand aside and watch, okay, until we have a definitive reversal happening within the counter trend space. Then I think it's only then it will increase the odds of success. Okay, so you can see in the 1 hour, there's also no counter trend in place. So for the time being, you don't want to buy this index at such high levels. Okay, although you can see on the short term 1 hour, this ADX is climbing very aggressively, and this is suggesting that this move here has momentum to go even higher. So based on the fact that ADX is climbing in the German DAX, and that is telling us that near term we can expect this index to go higher. So do not go into a counter trend short sell just yet. Okay, and wait for the market to peak like this. For example, here again, we want to see whether the ADX, when it peak, what does it do? It is almost correspond to the very top. So the moment the ADX now is looking like very much like what we saw back here, right? So the moment it climbs and then start to peak and turn down, is where you want to exit all your long position and then wait for opportunity to go counter trend. Okay, so timing is everything, right? So you want to make sure that you don't get into a short position prematurely. You want to make sure you get into a short counter trend position as the market is weakening. Okay, so far there is no sign that it is the case right now. So it is worth to watch out for signs. Okay. So as far as Asia is concerned, we know that we want to watch the Nikkei 225, which is the Japanese equity markets. This is the monthly time frame. You can see that the high is at 42,484. The market has taken a major dip, okay, and then it bounced just as aggressively. So this is on a month-to-month basis, and this drop here has a lot to do with the yen carry trade. But now the market seems to have recovered from that fiasco and is again exploring the higher end. Okay, now it's trading just under 40,000. On the weekly time frame, you can see that there's also a counter trend in place. The monthly has a counter trend, the weekly has a counter trend. So this move now we wait for the market to get into this VDR area, okay? Because we are seeing the same counter trend in place in the monthly, the weekly time frame. So this market is looking to be very exciting. I want to pay more attention to the Nikkei 225 because it is unlike what we see in the US equity markets. As far as we can see, only the Nasdaq 100 has a counter trend in place. The DAX and the FTSE do not have, so it is not in sync. But I want to watch the Nikkei 225 because the new Prime Minister has called for an election. Okay, so again, if he managed to get a higher mandate, then it will be positive for equity markets in Japan. Otherwise, I think the market has been telling us that there's a lot of outflow of fund from the Japanese equity markets. This has been compensated by a lot of buybacks by Japanese companies. So the bump up in prices over the last few weeks has been supported by none other than local company doing buybacks. But the foreign funds are actually has actually been leaving the Japanese market. So this is something that you want to watch as well. So if we're going to get a major downturn, I think it's most likely going to happen in the Nikkei 225, if anything. So this is the daily time frame. Okay, daily time frame right now, prices are deep inside the VDR area, very suitable for counter trend trade. And if I sell anywhere near where the market closed on Friday, it is actually a very low risk because I stand to lose. I stand to have a very nearby stop. Okay, if I'm wrong, but if I'm right, there is possibility of market dipping all the way to 35,600, which is very far away. Now in the 4 hours time frame, same thing. The market has actually flirted with this area. Okay, it missed taking out this level by 3 lousy points, and right now where it closed on the 4 hours is actually still very conducive for doing counter trend, unless tomorrow when the market opens it gaps up. Okay, there is no catalyst for it to gap up. Okay, we will have to watch early tomorrow morning. Okay, so this is the 60 minutes. 60 minutes, we can see that the market has been struggling to go higher. The high traded was, like I said, 3 points away from the point of invalidation. This is 10 points, sorry. And you can see the price has been struggling. This is a good price to do counter trend because the market is non-trending. Okay, that means to say that there is very little risk that the market is going to run away to the upside. So on a risk reward perspective, going short the the Nikkei 225 is to me actually very, very attractive. Okay, I will consider doing this trade tomorrow if this is still the case. As far as the other major Asia market is the Hong Kong market, we want to take a look at the Hang Seng Index. Now, the Hang Seng Index has been in a major downtrend for a long time, and up to the beginning of this year, we can see that the Hang Seng Index has been in a doldrum. Okay, in fact, the dominant trend is down. You notice that the market turned positive here in middle of 2022, and then there was a major sell-off. And this sell-off did not take out the point of invalidation. In fact, it went very deep into the very deep retracement. So the first thing I'll look across the board. Every time I want to look for a trading opportunity, I'll look at the monthly time frame of all the index or rather all the markets that I track. If any one of the product has a move into a VDR, whether it's to the upside or to the downside, especially the monthly and weekly time frame, I will be very interested because that is signify a major turning point over the much longer term. Okay, so we can see the price went up to 14,777, and it has not looked back. This year, the market started on a very high note. The Hang Seng Index has been climbing since the beginning of the 2024, and that has accumulated in a move up to 23,264, and all this happened within just 3 weeks. You can see this. Sorry, this 3 months here. And you can see clearly the big move actually happened over the last 3 to 4 weeks. Okay. Of course, we have a major reversal here. Okay. But on the weekly time frame, this is not considered a reversal. It's just a pullback. Okay. However, if you look at the lower time frame, it does look very scary. But this is what we are seeing here. Market has a chance to buy. Anybody who would have bought earlier on would still be in a long position because the only place you will sell is at 24,920. Okay, so based on this, there is a possibility of a 3-wave, and the 3-wave has already hit equality. This is the equality level, and this is where technically where the profit taking came in. Okay, so it is to be expected. On the daily time frame, you can see daily time frame. This move here has been very. What I want to show you here is the ADX. Monitor the ADX because the ADX hit 23,264 for the highest point this year. Okay, and almost immediately it tapered and came down. Okay, so the down move was actually preordained. Okay, because when you see the ADX coming off, okay, you know that this entire move here, at least for this move here, is considered over. So always look at the ADX for clues that the market has a blowout stage, and this has been very useful for me as an indicator. So for a lot of people who use ADX, I think I use it very differently. ADX is an indicator that measure momentum and also give us signal to buy and sell. Meaning to say there are 3 lines inside this index, but I've basically eliminated the other 2 lines, which it serves lesser value to me. But the ADX itself is been very, very instructive in telling me whether the market is at a blowout stage. Okay, it will work for both down and upside. So in the 4 hours, okay, we can see that this move here has been rather aggressive, but we've already been warned in the daily time frame. Okay, the market gaps on that day itself on Monday, and then the on the way down. So the market has seen the bounce. I think the bounce may continue into tomorrow's trading after China has launched the latest stimulus package, and I think the market should be able to take it very positively. So tomorrow, I do expect the market to open on a high note and maybe continue higher. Okay. This move may not be over. I suspect that this move is going to be able to take out the next high, the high that we've seen so far. Okay, so for now, there is still no sign. In the 60 minutes, tomorrow, if this ADX starts to climb very aggressively like this kind of phase here, I know that this market will have enough momentum to go higher, and it is then maybe switching to a more aggressive entry method is called for. Okay, so again, I'm looking for the possibility that the high will be taken out, and if this is supported by a rising ADX in 60 minutes, that will be giving me the confidence to chase the market. Right, now I'm finished with equity markets. That gets to the dollar itself. Okay, I will start with the euro versus the dollar. This is the major currency pair. We can see that the euro dollar over the longer time frame, this is the monthly time frame, has been in a bear market. Okay, it has been, you can see the bigger box is a pink color box. So it's telling me the dominant trend is down. Okay, so the strength in the euro, okay, so far is not so much the strength of the euro. It is actually the weakness of the dollar, because in the currency pair, there are two currency at play. Okay, if one is going up, the other one is coming down. And in this case, it is not so much the strength of the euro, okay, because all the economic data that comes in has been telling us Eurozone is not doing very well. So that would suggest that the currency will not be too strong, okay? And the reason why the euro has been doing relatively well against the dollar is because the dollar is on a relative basis weaker, okay? So we can see to stay short on euro dollar is basically the play, but however, we know that this is a part of a counter trend rally, okay? So be aware that this counter trend rally is by no means over. So this is the weekly time frame. The market has been trading between 1.127 to 1.04 half. So this is a very broad range. The market has hit somewhere near the upper end of the range and has come under selling pressure. So whether this is going to continue lower in the euro dollar remains to be seen, but we will have to take our clue from the lower time frame. Lower time frame, we can see that the ADX is climbing. This is the daily time frame. So this suggests that this down move from 112 does looks like it has momentum to continue to go lower. So I would think that if I have to take a position, I want to be on the sell side of the euro dollar and not on the long side of this. However, the price right now has already left the pink color box. I want the price to get back into the box before I take another look, okay? Because at the end of the day, I want to take only low risk, high reward trade setup. And if there's none to be found, then I will walk away. Okay, so we can see the lowest traded 109 traded on this past week, and it has been rebounding somewhat. On the 60 minutes, this has been the case. There is a counter trend in place, but I won't be buying for sure because the dominant trend is still down. You can see dominant trend is pink and it's coming down, and there's a bit of a bounce, but this bounce does not look like it has enough momentum because the ADX on the 60 minutes has not been climbing. So I wouldn't want to do anything in the euro dollar for now. Okay, let's take a look at the sterling. Likewise, on a monthly time frame, the sterling is majorly down. The dominant trend is definitely down, and prices has been on the rebound. Again, not so much on the strength of the sterling because the UK economy is not doing too greatly as well. The high traded so far was last month at 1.3434, and this month so far it has been down. For the last 2 weeks or so, we can see prices, although have bounced off, is beginning to look like it is losing some kind of momentum. And we want to take a look at the daily time frame to see if that's been the case. We can see the ADX is still climbing. Okay, so this climb here suggests that this move here is supported by the rising ADX. So you can see ADX is climbing and the market is coming down. It means that this trend, whatever the trend is, okay, it can be uptrend, it can be downtrend. It means that this trend, this trend here is being supported by a rising ADX. So for time being, again, it is going to be telling us sterling, if given the way the ADX is suggests that we maybe will be seeing more downside. Okay. And this is so far the counter trend. The high is 34.34, and the price has come down to as low as 130.15. Okay, it has been doing basically down. Okay, and the ADS is not suggesting that this trend is continuing. So very much different from the daily time frame. On the 4 hours time frame, it shows that there is no trend. Okay, the market has been coming down, but this is not a trend. Okay, on the daily time, on the 60 minutes, again, the market has a bit of a rebound, and we're beginning to see the ADX beginning to climb only recently, suggesting that this is still very early part. Okay, there is no definitive sign that this uptick here from 130.15 is sustainable. Okay, so again, but all said and done, I don't think the opportunity is in either the euro or the sterling. Let's take a look at other currency pair. Let's take a look at the dollar versus the yen. Okay, this is the monthly time frame. Dollar yen peaks just under 162, came under intervention by the Bank of Japan, and it's gone out to as low as just below 140. So this is a big move, almost 2,000, more than 2,000 points. Okay, so this is actually quite drastic. Suggests that this rebound here, is it going to be temporary? Is it a reaction to this drop here? We will have to see in the lower time frame. Let's take a look at the weekly time frame. Okay, weekly time frame suggests that this market is still very much in the uptrend. Okay, and that perception will only change if the market take out 126.36. For the time being, the market is still exhibiting over the last week or so that the market wants to go higher. Whether it can go higher remains to be seen, because the new prime minister is seen to be a hawk, and he favors the Bank of Japan to hike rates. And if the Bank of Japan hike rates, the yen will get stronger, meaning the dollar yen is likely to go down. Okay, so again, we want to see what comes out of the election, and if he get a strong mandate, that means he is in a better position to actually pursue his policy of asking the Bank of Japan to hike interest rates. For the rest of this year, I think the risk of another hike is not so high, although inflation is beginning to creep back up again. So if inflation creeps back up, of course, the Bank of Japan will have to hike rates. So right now we are watching to see, one, the outcome of the election, and the other one is to see whether the Bank of Japan will be in a mood to hike rates. Of course, if Japan is a sovereign country, it can decide everything it wants to do. However, it is beholden to the United States. So whatever they want to do on a monetary policy front, I suspect they will have to coordinate with the Federal Reserve and the US Treasury. Okay. And this is the outlook for dollar yen. On the day time frame, you can see the drop from 162, dropped down to 130, 140, went into this blue area. This is again the VDR area. So you can see that this is a great counter trend. Market is up, so this is dominant trend. Dominant trend suggests that market is going higher. However, we have a very sharp drop, more than 2,000 pips into this shaded blue area, and this is trading with the trend. We are not trading counter trend because the original trend is up. Okay, it is dominant trend is very bullish. However, we have a very sharp drop into the VDR area without taking out this level of 137.24. So it does make sense to go and buy if the market drop into this area. But that was then. It only came once, and then it has been rebounding since. So the next trade to look out for is for prices to continue to trade higher, ideally to trade into this shaded pink area at 155, 154.40, thereabout to 156. If the price goes into this area, then I'll be very open to looking for a sign of weakness to trade on the downside, because I don't believe this move is complete. Okay, this move from 162 down to 140, it does not look complete. It's missing one more leg. So what we are probably hoping to see is the market drop, bounce into these areas, lose momentum, starts to come back down, and then extend in the larger three-wave pullback. That will be massive, okay? And the next drop may most likely take out the 137.24. Okay, so on the lower time frame, when we look at the 4 hours, we can see the market has been struggling higher, and we already have a counter trend in place. Okay, this is the counter trend, and right now we don't have any buying opportunity. In fact, the target for the 4 hours is actually quite nearby, just under 150. Okay, whether the market can get into this area, we will have to watch early tomorrow. Okay, on the 60 minutes time frame, prices are getting very close to the VDR on the counter trend. So all the market need to do is go a bit higher to 149.20, so 149.30. Then it will be within this counter trend area. Then I will look for sign that if there's going to be a reversal on the candlestick, if I find one, then I am open to sell the dollar versus the yen for a short-term play. Okay, selling anything between 149.30 all the way to 149.60. Okay, and this will be my clue. If I'm selling, then I want to put myself just marginally above this level, and then take my chance. If the market do pull back, my target will be 147.40. All right, when we are done with the dollar yen, let's take a look at the other pair, which is dollar Canadian. Now, the dollar Canadian has actually been trading not very aggressively. You can see that this is a monthly time frame. You can see the dominant trend is dollar is strong. Okay, in fact, the dollar has been strong for quite some time. When we look at the higher time frame for dollar index, we can see that the dollar long-term for the weekly time frame has been relatively strong. Here we can see that the dollar versus Canadian has been stuck between 147 to 120. So it has been oscillating between this very broad range. So as the market goes into the upper end of the range, it does make sense to look for selling possibilities. This is based on the monthly time frame. The weekly itself, we have a counter trend in place. In fact, there are 3 times the market went into this VDR area and pulled back down. Okay, so now the market experienced one large move up on last week. It is very likely that the dollar strength will continue into this week and above 138.20 levels. So there is a possibility this area will be revisited one more time, and we will look for a selling opportunity. Okay, and this is the daily time frame. When we look at the daily time frame, the ADX has been climbing very aggressively, suggesting that near medium term, the dollar strength is going to continue. And I suspect this move in the dollar, okay, is a result of capital inflow into the United States because of that expected retaliation by Israel against Iran. Because if that is the case, then I think depending on where Israel hit, whether it's going to be the Iranian oil fields or worst case, their nuclear facility, then the surge in the dollar may actually accelerate. Okay, just watch out for development in the Middle East if Israel actually launch a retaliatory strike. Okay, on the oil field, it is bad, but isn't as bad as a strike on the nuclear facility. But you can see the dollar has been going up largely due to, I believe, the inflow of capital into the United States as a haven play. Okay, whenever there's uncertainty, people will want to hang on to the US dollars. And this, I suspect, is the reason why the dollar has been relatively strong over the last 2 weeks. So we can see in the, technically speaking, on the 40 minutes, sorry, the 4 hours. The 4 hours, we can see that the ADX on the 4 hours has actually peaked somewhere here. You can see that it has been struggling since. Okay, whether this is a sign that it is worthwhile to go counter trend remains to be seen, but I will revert back to the daily time frame. Daily time frame is very, very strong, so this is a sign that there is momentum behind the daily time frame rally in the dollar. So I would be very cautious trying to do the counter trend trade, even though the lower time frame suggests that there's a counter trend in place. Will I want to do counter trend in place? Right now, I think I will hold off for a while and see the reaction in the daily time frame. If daily time frame starts to pick and fall back, then whatever sell signal that comes out in a lower time frame, from the 4 hours to the 60 minutes, then there's a higher likelihood of success. Again, we can see that the dollar has been struggling. In fact, it has stopped going up. Okay, so again, I will revert back to the daily time frame for confirmation. Don't get too gung-ho with the dollar just yet, because there's other factor in place. The other currency which I have not talked about is on the Aussie dollars. Okay, the Aussie dollars may actually benefit if tomorrow's when the market open in China, because of the stimulus package, the yuan may actually be strengthened and they may actually spill over into the Aussie dollars. Right now, the Aussie dollars on the monthly time frame has been flat. Okay, it has been trading between 80 cents to 61 cents. Okay, again, almost a 2,000 pips range, and markets at the lower end of the range. Right now, it does look like a counter trend rally is unfolding, and this unfolding will take quite a while, maybe into 2025. Okay, on the daily, on the weekly time frame, this consolidation here is a sign. Whether this is a rally, drop base rally remain to be seen, but I think there's a good chance the market may actually go higher. Okay, and if that's the case, it means dollar have to come down. Right now, the dollar is so strong, so it doesn't seem to be the pattern. Okay, so in the meantime, this consolidation in the Aussie dollars is a sign that Aussie is waiting for some kind of reaction. I may be coming in from the monetary policy front. So if the Reserve Bank of Australia starts to cut interest rates, maybe this one will have a reaction. So far, it is not. In the daily time frame, we can see that the market is non-trending. So this drop here may not persist. Okay, this drop here, if it persists, should be accompanied by rising ADX, but we are not seeing that. So this give me the comfort. If I want to do anything counter trend, it may actually work. Okay, so right now the dominant trend is up. So this move here is not supported by a rising ADX. So I'm not going to be selling the Aussie for time being. In fact, based on the daily time frame, the market price here is in between the two VDR, which is not conducive for taking a trade. In the Aussie dollars, in the 4 hours time frame, you can see that the market actually peaks here. So it means this drop here from just under 70 cents has lost its momentum because the ADX has started to drop. Okay, so this is the beginning of a new trend. Whether this trend can be sustained, we will have to watch the ADX. The moment it starts to climb again, if it continues to go higher, chase it. Okay, I will be more happy to look for level to chase. Okay, if the market starts to rise as evident by the ADX, whichever direction is trading, I want to be on that side of the market. So on the 60 minutes, we can see that market is really not going anywhere. It's basically sideways with a little bit of bias to the upside. Immediate target is about 67 cents. Okay, so again, I do not believe the currency market is where the action is going to be. Okay, it could all happen somewhere else. Let's take a look at somewhere else. In the oil market, let's take a look at the oil market. Now, oil market is very interesting because it's very rare that this is the WTI, okay, which is the West Texas Intermediate Crude Oil. It's very rare on a monthly basis for prices to go into a VDR, but we have prices gone into the VDR last month, okay, and it's beginning to bounce. So this is an area in which I want to buy because this is the dominant trend. Dominant trend is green color, is a bigger box. So I'm trading with the trend. Okay, the last time it happens here was I think late 2022. Okay, and the market actually bounced quite a fair bit just to under $94 per barrel from $64. So that's a move of $30 per barrel. It's quite a big move. On the weekly time frame, again, it is confirmed. Okay, the dominant trend is up, so we should be looking for levels to buy, and we did get a chance to buy last month, and the market has actually gone up. I actually was long for a while until the market peaks and come down, and I got out. Okay, so now I'm kicking myself for getting up too early. Okay, because on the daily time frame, what I was trying to avoid was this. Okay, this is a very bearish development. I actually got up before this move happened. Okay, so but when we look at the ADX, there was a period of time it looks like it's going to taper and come down. But now that the market has rebound back, the ADX has recorrect itself to the upside. So right now I have no position, but I'm looking for a level to go long because considering the very correct the tension in the Middle East, outbreak of war in an oil producing region, it's definitely very bullish for energy products. So I'm looking for a level to see if I can get back in on the crude oil trade. Okay, but I'll be looking for levels to buy because again, this move here is up, followed by a rising ADX on the daily time frame. Now that the market has already take a move down, I want to look for the next uptick in the ADX to get confirmation the market is again on the run. So far, it is not. You can see ADX is coming down, and prices, although it has been elevated, it's not showing a sign that it's about to run away. Are we going to be able to find something on the 60 minutes? On the 60 minutes, unfortunately, we are getting into a VDR on the counter trend. The dominant trend is up, the counter trend is down, and the prices are in the VDR area. And you can see the prices has been struggling below $75.65. So right now, based purely on the fact of a risk-reward ratio, then we want to be looking for levels to sell. But again, we want to be very careful considering the risk of a play out in between Israel and Iran is actually quite real. Okay, so if given a choice, I want to look for buy rather than sell. So again, we want to watch this move. Okay, and what about gold? Gold has been very aggressive this year. Gold is at a record high just last month, okay, at $2,685.55. And prices on a close-to-close basis, the highest we have ever seen at $2,657. So gold is definitely on a bullish streak, okay? We want to be as much as possible to be on the long side of gold. But having said that, okay, there's a very good chance that we may see an important top in gold in this month. Okay, so I'm looking for some sign that the market is reversed and it may create a temporary top for October. Okay, and this may last a couple of months going forward. So in the weekly time frame, you can see that the market is so bullish all the way from October 2015. Both for the last 9 years, every signal has been telling me the gold market is going to go higher. And this has resulted in a blowout move to $2,685.55 per ounce. On the daily time frame, again, we have a counter trend in place. So we are beginning to see some kind of a weakness, although on Friday we have a major surge in gold prices, closing at $2,657. The high remained at $2,685.55. So if the price gets into this shaded pink area, again, it will be quite conducive to look for counter trend trade. Right now, in the 4 hours, we can see that the market has been very strong. You can see that this move is up, accompanied by rising ADX, and the angle in which it's rising is quite steep. Okay, that means to say that there is quite a fair bit of momentum behind it. So do not try to sell even though the gold price is currently in a counter trend area. Okay, because this ADX is just simply too strong. Okay, we want to look for something like this. The moment it loses momentum, then maybe we should look for, and if it happens within the counter trend area, then that'll be great. However, if the price surge beyond this area here at $2,677.85, then do not go and buy it. Okay, wait for the next counter trend to be in place before you try to, because the odds has shifted to the downside because everybody is on one side of the markets. Almost practically everybody you talk to about gold is very bullish. So it means to say that the majority of players are on the long side of the market, and this make the market vulnerable to a sudden move to the downside. So this is the 60 hours. 60 minutes shows that the ADX is not rising as fast, although in the 4 hours, it is rather aggressive. Again, when you look at this latest picture here, the dominant trend is up. You can see all you see is green color box, meaning to say that the dominant trend is up, okay? But there are period of time when the market came to as low as 2,602.70 cents. Very, very close to taking out this low here, but it did not. Okay, so that offers us the best possible risk reward ratio because the risk is only 20 cents. The low here is $2,602.72. The point of invalidation here is $2,602.54. Less than 20-cent risk to exchange for the possibility of a rally, and it did happen. Okay, so sometimes it is worth our while to be looking for signs in the lower time frame to look to see if we can trade with the trend. In this case, if we are bought anywhere in the blue area, from 2006-15 onwards, you would be looking very pretty right now when the market is $50 away. Okay. All right. Now we are finished with the most of the major assets. Let's take a look at Bitcoin for one. Okay. Now this is Bitcoin. Bitcoin, for those who traded Bitcoin, has been a bit frustrated because over the last 7-8 months, Bitcoin has not been trading anywhere. The high traded is 73,767.5. Okay, and that has been what, 7 months ago. Okay, and he has not been trading new high. So that leaves the market with the dominant trend up. Bitcoin is in a long-term bull market. Okay, the market hit a high here and has been struggling since. Okay, now the market is going back up again. Let's see if there's going to be any chance for us to trade. So this is the weekly time frame. Dominant trend is up. The market hit a pocket here and it was conducive to do counter trend. If you have the stomach to do counter trend in a obviously bull market, then this area here represents an area of opportunity for people who are very adventurous and they're there to go in and trade counter trend. Okay, the area was just under 72,000. It only flashed once and went up to as low as 49,000. Now the market is back up again. Now where the price is right now, this currently is actively traded. Now IronFX is one of the very few brokers that actually offer 24/7 access to cryptocurrencies. So currently where the market is quoted at 62,728. So it's neither here nor there. It is not inside the counter trend VDR. It is not in the dominant trend VDR. So it's somewhere in the middle. So there's, if you look at this time frame, it doesn't give us any useful inputs. Okay. However, things may change as we go down to a lower time frame. Prices again in the daily time frame doesn't give us any clue. The market is basically doing sideways between 72,800 to 49,000. So very wide range. The market is doing a 3-wave bounce, and at most we can expect the price to go back into this VDR in a counter trend. So the prices goes back into, let's say, 68,000 all the way up to 72,800. I think that area represents again another chance to do counter trend because the ADX is not climbing, meaning to say that if I do counter trend, the odds of success is actually relatively high. Okay, then again, we want to confirm that with the lower time frame. Lower time frame, you can see that this is the 4 hours. 4 hours, we see the ADX was climbing until recently it peaks and come down. So the market has been rising from 59,000 all the way to 64,460, and then it went flat. And this is when the ADX start to come down. I mean to say that this phase when the market was rising is over. A new trend could be developing. So for now, I want to see if prices can go into this VDR area in the 4 hours time frame. Okay, you can see that I actually put some levels to remind myself where to put my stop if I want to go into the trend. Now, 60 minutes, you can see that 60 minutes is actually quite strong. Obviously, there is a counter trend in place, very, very shallow one. This is the counter trend. Counter trend for this, I will have to input this. So there is a counter trend in place, okay? Let me see if the counter trend has hit its target. There's a good chance it may have already hit its immediate target. Yes, it has hit its target, okay? So the target is at 62,540. The low trader here is exceeded it by a bit. So what I can do is redraw the parameter after the market has hit its target. So what this can be a teachable moment. Let me expand the chart to show you the price action a little bit clearer. So I expand it by 2 times. You can see that this is the counter trend box and the market has hit its target. Okay. So to make it easier for me to see, I want to also check. Okay, no. I want to change the color of this. And this actually exemplify why I'm a visually, I need visual aids to actually see the market clearly. I always say if you cannot see in the price chart, it's not there. So this is where we are right now. This is the new parameter in which prices are being fought over. You'll notice that this high here, the peak of this high is actually in the VDR area at 63,338. As the market bounce, if I'm watching this market, I should be able to sell this and I would have got this trade and exit this trade with a nice profit if I'm going to be trading short term. Okay. Now that the market has moved into a new parameter, I have to redraw the box. So this is the new box. And to show you where the VDR is, this is the area. And let me shade it with a different color. Like I said, this is a teachable moment. High here is 51.5, the low is 69.43. I want to get it correct, yeah. And I want to do this with a different color. So there you have it. Okay. So this is the VDR, the new VDR area. Okay. Market is showing sign that it's going to come off a little bit. And this is how you do it. Okay, guys, this is for Bitcoin. Okay. I'll finish with one last which is the Ethereum. Okay. Ethereum is also showing a bit of a sideways market. Okay, we can see the dominant trend is up, but we have a massive counter trend which trade into the VDR area on the dominant trend. So as the market came down very sharply, it went into the VDR of the dominant trend, which would immediately trigger buying, the search for buying opportunity. Market, if we have bought anywhere near 885, okay, would have been sitting very pretty because the high traded was 4,000. Even at current price of 2,466 is still very nice entry price. Okay, so it's very rare for the price action to go into the VDR of a monthly time frame. Okay, anytime the price goes into the VDR of a monthly time frame of any asset class, I will be interested to trade that market because I can hold a position for quite some time. Okay, here we can see the dominant trend is still up. Okay, we have a counter trend in place. But right now, where the prices is neither here nor there. Okay, but ideally you want to look for levels to buy. Okay, here you can see that the dominant trend on the daily is actually down. In the daily time frame, the dominant trend suggests that prices are coming down, but it's non-trending. The ADX is not climbing. So this move here is basically a sideways market. So lower to buy. If price goes back into this area here between 2,241 to 2,110, this will be a great area to pick up buy position. Okay, so if you can see the same thing happening in a lower time frame, take it. Most recently, it did happen again. Okay, it came back into this dark blue area, which is a VDR area. And if you have bought, prices have gone up to 2,487. Now you can see the ADX has also peaked here. ADX peaked almost near the top and it's coming down now. So it means that this entire phase here, the run up from 2,328 to 2,487 is over. Take your profit and be happy with it and wait for the next trade setup. Okay. So in the 60 minutes, same thing. 60 minutes does not give us any chance to go in just yet. Okay, the market is non-trending, and it is neither here nor there. Okay, it is not near the VDR on the buy side, it's not near the VDR on the sell side. So I hope this has been insightful for you for whatever you're trading. And like I said, I couldn't cover the other markets which I normally do. For example, the KLCI or the Singapore versus the ringgit rate. Okay, but whatever I can do, I will share with you. If there's any question, is there any question that you want to ask me? I noticed that you guys have been very quiet. Nobody posts any question in the chat box. Right, there will be a recording of this, and for those who wants a copy of the recording, reach out to me. I'm told that they will give me the link to the recording, and I will forward it to you if you want. Yes, I think Rosabel had raised your hand. Just if you want to unmute yourself, you can. If you don't, you can always type your question into the chat box. Rosabel, what can I do for you? Are you able to unmute yourself? I assume you have a question that you want me to address. Yes or no? Oh, there are 9 questions here. I'm so sorry, but I'm looking at the wrong place. Okay, let me go through the question one by one. I'm so sorry. Uh, oh, is the chat not enabled? Okay, never mind. One question here is by Yak Lo, Tian Yak, eh? Please send a copy of this recording to. Okay, let me see if I can remember this email later on. Okay, but you should be able to find a copy of the recording on YouTube. I'm told it will be posted on YouTube. This, as far as Raja Kumar is concerned, this platform is the MT4 trading platform of IronFX. It is not TradingView. Okay. Again, Raja Kumar is asking for my view, is the ADX a leading indicator or a lagging indicator? It is, to me, a momentum indicator, and the usefulness of the ADX obviously is when it starts to rise. I know I will have to switch to a more aggressive entry method to chase the markets, and which is something that I don't normally do. But if the market, if the ADX starts to pick and fall, okay, does not mean that the market is about to fall. If the market is trending down very aggressively, the ADX will also climb, okay, in a 45 degrees. And the moment it peaks, it means that trend is over and I should look to get up, okay, while I still can, before the market actually move aggressively in the opposite direction. So to me, it's as good as a real-time indicator. It is not leading, it's just not lagging. I think it's actually quite a timely indicator as far as picking the reversal point, okay? And if the reversal point is accompanied by other reversal signals that you recognize, then that makes it more relevant, okay? But instinctively, when you see the ADX after climbing very aggressively start to pick and come down, whatever the trend is about, is already has probably ended, okay? And if you are on the right side of the market, you want to take profit, and you take a cue from there. Now, dollar is getting, this anonymous attendee, I don't know who you are, okay? The dollar is getting stronger again these past weeks. Does it mean the market is moving towards safe haven? I suggest, like I say, I suspect it is the case, because what happens over the last 2-3 weeks? Remember, October the 1st, we have Iran raining missiles onto Israel. And since then, the dollar has been strong. So it is no coincidence why the dollar has been strong over the past 2 weeks. And I think it has everything to do with the Iranian attack on Israel. Capital is moving towards a safe haven, and I think logically they are moving to the dollars. Now, Dennis is asking, yeah, ADX is a leading indicator, but I would call it a timely indicator. It doesn't lead the market, but it does give me a clue based on other things that I do look at. Or Dennis is looking for silver. Okay, I have not talked about silver. Maybe I should. Sam is asking why the dollar and gold is moving the same direction this week. Now, the correlation that we know, dollar goes up, gold come down. Now, this correlation is not cast in stone. Okay, there are times in which both markets go up in the same time. You see, there are also cases where in which we saw equity markets goes up, gold go up, the dollar go up. So this is not a normal correlation. So there are times whereby the correlation do not work as well. So there are such the dollar went up because of possible haven play. Now gold is also a haven play. So so both are haven assets. So if you see people are getting nervous about the geopolitics, they move their assets into the dollar, they move their assets into gold. So that could explain why both assets are moving in the same direction this 1 week. Okay. Anonymous is asking, we are only able to do Q&A. Cannot use the chat. Okay, so I'm so sorry. Now I know. Okay, now again, somebody's asking about silver. I will talk about silver right now. Okay, so I will finish up the session with the look at the silver market. Okay, this is the silver on the monthly time frame. You can see silver has been very, very strong. However, silver is in a dominant bearish market. Okay, yes, the market has been trading to the year high so far, almost $33 per ounce. Okay, but as we move forward, okay, this, remember, the bigger box is a dominant bear market. So the market goes into $38.60 odd cents. I will start to look for reasons to go counter trend. Okay, because I want to, as far as much as possible, I want to trade with the trend. Okay, and in the daily time frame, there is no counter trend in place. So the time to do counter trend is not here yet, because on the weekly time frame, there is no counter trend to be had. Okay, the last time we get a buy signal was at $17.53. Okay, I have been buying silver for a long time, but I got out at $19. I mean the physical part of the my investment. Okay, so on the daily time frame, there is there's counter trend in place from just under $33 per ounce. Market went up to test $30 and bounce. So right now the market price right now is in between this extreme parameter of this counter trend range. Okay, so there's nothing to be seen here as far as I'm concerned, because the ADX is not climbing. So there is no trend. I don't have to worry the market running away. On the 4 hours, there is a chance to go counter trend. So if you believe that anywhere from $31.50 is going to be good enough for you to go counter trend, just remember the point of invalidation is $34.88. And if you have not already short, maybe a better area to go short will be at $31.68. And that will reduce your overall risk by quite a fair bit. And target here is for a move down to $29. Quite a big move here. And this could actually result in an ABC move. Earlier on, I did mention, look out for a major top in gold in October. So if that plays out, maybe the better trade will be in silver. Because silver so far for the last month or so, it has been underperforming gold. Okay. And in the 60 minutes, you can see 60 minutes, silver right now is in the VDR area. For those who are not prepared to sell at $31.50, maybe you can position yourself with a sell limit order waiting for it at $31.70. I am also actively looking for a short position in precious metals. I have not taken up a position just yet. Okay, I just want to see confirmation. Right now, this one is not exactly very definitive. Okay, I want to see a reversal pattern in the candlestick as well, accompanied by prices reversing from what we call the VDR area in this dominant trend. In the 60 minutes, the silver is in a downtrend. Okay, so I will be trading with the market on the 60 minutes time frame. So the odds of the market going a little bit higher and make the sell a little bit more we call it convincing, is to be accompanied by a reversal pattern in the daily time frame, not in the candlestick. If I can see a candlestick reversal within this shaded pink color area, that will give me the incentive to go in and sell. Okay, let me see if there's any other questions outstanding. Is ADX less accurate in lower time frame? Yeah, any kind of indicator will be less reliable in a lower time frame. If you go down the time scale, it becomes less reliable. Okay, so always refers to somewhere in the middle, like the daily time frame. The daily time frame is actually quite middle of the road. So if you want to do the lower time frame, it is always worthwhile to take a look at the daily time frame. And especially if the ADX is climbing, that means to say that you don't want to stand in this way, because the market has momentum behind. Okay, guys, I hope this has been a good session for you. And this is the first time we are doing it on IronFX Zoom platform. That also explains why I wasn't sure that you did not post your question in the chat. Now I know it's all happening in the Q&A. segment. All right. For those who want a copy of the recording, reach out to me by WhatsApp, or you can always reach out to me by Messenger if you can find me. Right, guys, thank you very much for your time, and I will see you next Sunday. Bye-bye.